Hi, we would like to present our assignment for FAR570 with our main topic of MFRS 8 operating segment and interim financial reporting MFRS 134. Companies that we pick for this assignment are Telekom Malaysia and Petronas. First, let me introduce myself. My name is Muhammad Iqmal and my members are Azatul Azwa, Monalisa Shura and Sandra Felicia. I will briefly introduce two major companies that we choose in this assignment. First, Telekom Malaysia or TM was originally part of Jabatan Telekom Malaysia before it was corporatized and renamed Telekom Malaysia Berhad in 1987. 3 years later, in 1990, the company was officially listed on Bursa Malaysia. Today, TM stands as one of the country's largest provider of fixed broadband or internet telephone services and is widely recognized for its flagship fiber broadband product Unify. Petronas is established on 17 August 1974. It is fully owned by Malaysian government. Over the decade, Petronas has expanded to operate across the entire energy value chain, which include upstream exploration and production, midstream gas processing and LNG activities, downstream refining and petrochemical, as well as energy initiative focusing on cleaner and renewable solutions.
Good day everyone. Today, I will be presenting about MFRS 8, which focuses on operating segments in financial reporting and how it is applied by Telekom Malaysia Berhad. Financial reporting is important because it helps investors and stakeholders understand how a company is performing. Segment reporting breaks the business into parts, showing how each part contributes to revenue, profit, and assets. An operating segment is a part of the business that earns revenue, incurs expenses, and is reviewed by management. Segments can be different by products, customers, or regions. For example, corporate headquarters usually does not qualify as a segment. Telekom Malaysia Berhad reports three main operating segments, which is fixed line and fiber services, mobile and wireless services, and TM Global and other services. Each segment has its own revenue and expenses and is reviewed separately by management. MFRS 8 requires reportable segments to meet a 10% threshold for revenues, profit, or assets. The 75% rules ensure total segments revenue covers most of the company's revenue. Telekom Malaysia Berhad also discloses profits, assets, liabilities, and entity-wide info like major products and customers. In conclusion, MFRS 8 improves transparency in financial reporting and helps stakeholders understand how each segment contributes to the company's performance. Telekom Malaysia Berhad provides a clear example of this standard in action.
Under MFRS 8, the Chief Operating Decision Maker or CODM is the person responsible for evaluating segment performance and deciding how resources are allocated. This role is usually held by the CEO, COO, or CFO, which means the Chief Executive Officer, Chief Operation Officer, or Chief Financing Officer. In Petronas Chemicals Group Berhad, the CODM is the CEO, Mr. Mazwin Ismail, who oversees strategic direction, performance evaluation, and investment decision across the company's petrochemical segments. The company confirms this in its disclosure, identifying the executive leadership team as the CODM. Similarly, Telekom Malaysia defines its CODM as the person or entity responsible for resource allocation, strategy implementation, and divisional decision, with operating segments reported in line with the internal reporting to the CODM.
Now, let us look to types of segmental reporting by Petronas and Telekom Malaysia. First, let us look at Petronas. There are 4 segmental reports consist of upstream, gas and maritime, downstream and corporate and others. The upstream segment focuses on exploration and production of oil and gas. This is one of the main revenue contributors as it involves extracting resources that support the entire value chain. Next is gas and maritime segment, which covers LNG processing, gas supply and shipping. This segment plays an important role in transportation and distribution, supporting Petronas Cleaner Energy Initiative. The downstream segment includes refining crude oil and producing petrochemicals, fuels, and lubricant. This segment shows how Petronas deliver finished products to consumers and industries. Lastly, for Petronas, the corporate and other segment includes finance, logistics, and research and development. While it does not generate revenue directly, it supports overall business operation. For Telekom Malaysia, the segments are divided to B2C, business to consumers, B2B, business to business, C2C, carrier to carrier, shared service, and inter-segment. The B2C segment includes Unify and Unify Mobile for individual users. The B2B segment involves cloud services, cybersecurity, and data centers for businesses. The C2C or wholesale segment manages fiber infrastructure and international bandwidth, while shared services cover network support and IT operation. Inter-segment activities represent internal services provided across divisions. Now let's move to benefit segmental reporting. First, it improves transparency by showing clearly how each business segment performs, rather than combining everything into one figure. This helps stakeholders understand which part are strong and which part need attention. Secondly, it supports better decision making. Management can identify which segments are profitable, which are facing challenges, and where costs are rising, allowing them to take corrective action earlier. Lastly, it enhances resource allocation. When management knows which segment generate the best return, they can allocate budget, investment, and manpower more effectively, ensuring resources are used where they create the most value.
Interim financial reporting gives a snapshot of a company's financial position during the year, not just at the end. For Telekom Malaysia Berhad, this helps investors and management track performance, especially in a fast-changing industries. MFRS 134 sets the rules for the report, ensuring they are consistent, reliable, and comparable with international standards. The main goal of MFRS 134 is to provide minimum content for interim reports, including earnings, cash flow, and key events. Telekom Malaysia Berhad publishes interim report twice a year. In 1H 2024, the company recorded an EBIT of Ringgit Malaysia 1.26 billion, invested Ringgit Malaysia 460 million in network expansion, and declared an interim dividend of 12.5 cents per share. MFRS 134 requires disclosing significant events like network upgrades, seasonal revenue trends, and segment reporting. Telekom Malaysia Berhad applies the same accounting policies as its annual statements using estimates for revenue, depreciation, and doubtful debts. This ensures the interim report is accurate, reliable, and transparent for the stakeholders. Overall, interim reporting under MFRS 134 allows Telekom Malaysia Berhad to provide clear and timely financial information. It helps stakeholders make informed decisions, ensures transparency, and strengthens accountability and governance within the company.
The first event is Petronas selling its equity in Petronas DNP Argentina to Vista Energy Argentina. Petronas sold its 70% and 30% share, meaning it fully exited its operation in Argentina. This affected the statement of comprehensive income because Argentina upstream earnings were no longer included. However, it did not affect statement of financial position as the disposal did not change Petronas' overall assets and liability. The second event is Petronas buying back Diamond Gas Holding 10% share in MLNG2 Sdn Bhd, and Diamond Gas later investing the same 10%. This did not affect the statement of comprehensive income, but the buyback caused a small reduction in equity because cash was used. Through this process, Petronas kept full control of MLNG2. This event reflects Petronas' effort to manage its assets and strengthen its ownership.
Let's review the interim financial performance for Petronas Chemical Group Berhad across the 4 quarters that I have stated below. The one ending 31st March 2025 represents the first quarter of the financial year. Revenue rose slightly to 7,656 million from 7,499 million in 2024. But profit before tax dropped to 87 million from 805 million. Net profit was 18 million versus 703 million previously, with total comprehensive income at 993 million compared to 480 million, and EPS earnings per share moved from 8 cents to a loss. Quarter 2 ending 30 June 2025 reflects the second quarter. Revenue decreased to 743.7 million from 7,728 million. The company recorded a loss of 1,047 million versus a profit of 809 million, with total comprehensive loss of 1,029 million compared to 1,512 million, and EPS dropped to negative 14 cents from plus 10 cents. Quarter 3 ending 30th September 2024 indicates the third quarter. Revenue increased to 7,986 million from 6,784 million, but the company faced a loss of 752 million versus a profit of 439 million. Total comprehensive loss was 3,141 million compared to 357 million, and the EPS fell to negative 10 cents from plus 5 cents. Finally, quarter 4 ending 31st December 2024 demonstrates the final quarter. Revenue was 7,458 million, slightly higher than 7,213 million previously. Profit rebounded to 539 million from 142 million, with earnings per share at 6 cents compared to 1 cent last year.